Hey guys, it's Max Convexity. Hope everyone's having a great day. This is the daily covered caller end of day edition. I'm sorry this is late at 6:25 here in the Central Time Zone. I just wanted to talk about today because I love bullish days. Look at this face ripper. Look at that. What does that tell you when the market closes on its highs? It tells you that the only reason it stopped going up is because the day ended. Look for a gap up tomorrow morning. I mean, it doesn't always work, but I wouldn't be at all surprised if we have a gap up tomorrow morning. We'll see. Okay, so let's look at, we don't have profit boxes. Actually, we do have a profit box for that one. I forgot. So that was a full profit. That's that's QQQY. Now let's check JEPY. Or now let's check JEPY. That's right. Look at this, JEPY. This one we don't have a profit box on, but I can tell you it's a full profit without even looking at it, right? All right. And then Russell, we did have a profit box on because they did a 2-day option. So it was actually Friday's profit box, and it's well above. Perfect. A 3 for 3. Now let's look at USO. This is the Defiance Fund USO. Why? It's the only reason we ever even look at USO. It's United States Oil ETF. I think it stands for US Oil, but basically they just have exposure to oil futures. So it goes up and down with the price of oil. Well, the price of oil is coming down lately, evidently. So, all right. So they have two options. They have a 78 and a 77, and they don't expire for 2 days. So we'll keep an eye on those. Let's check the other stocks. Let's check Tesla. Nice job, Tesla. Also finished on the highs. Let's check Nvidia. Look at that. Finished on the highs. Check Google. Look at that. AMD, Amazon. I guess we can look at we'll look at the buffer report too. Let's see how much money these freaking funds made real quick. Triple QY made $1.5 million, 71 cents a share on the month is the profit, net profit, and the gross profit is $3.76 a share. Or no, I shouldn't say that's not the gross profit, but the extrinsic profit is $3.76 a share. Because that's how I figured the extrinsic. It's just all these extrinsic amounts right here divided by the amount of shares. All right, so now let's look at JEPY. These guys made 340 grand. 87 cents a share on a running earnings per share. That's great. $1.06 on the dividend estimate. That'll work. I mean, can you imagine $1.06? Think about that. The most this one's ever paid before, 76 cents, I believe. That's insane. The first month it came out, it may have paid more, but I swear it's never paid $1. There's no way it's ever paid $1.06. Let's just check out. Let's just check it out. I mean, it's easy to find out what it is. I thought maybe the very first month it was out, it paid a crazy high dividend. Okay, 91 cents is crazy high, but in any event, it's going to be $1.06 this month at this point. Yeah, we'll see. That can always change. Okay, so IWMY, these guys trade the Russell. They made $1.1 million. That takes them from a negative 31 cents a share to a positive 5 cents a share. That's huge. So all three funds are positive now. These guys have a dividend estimate of $1.35. Their highest has been $1.41 back in April. So this is an unprecedented territory for them, but for the other funds, it's unprecedented. USOY, we aren't going to look at. Tesla and Crash, we can look at. Okay. This is the Paris trade that I follow, where you own Tesla and Crash at the same time. One's a bullish fund based on Tesla, one's a bearish fund. Right now, if you bought them together, kept them balanced, they'd be down 9%. Their NAV would be down 9%. Well, no, I take that back. Their total return would be down 9%. Okay. So their yield on cost, which is how much they've paid so far, would be 20%. All right. So we can figure out the total return. Do you guys know how to do that? What we're going to do is we're going to take the NAV return, -9, and then we're going to subtract the dividend. So it's going to be -29 is what the NAV earned without the dividend. just the NAV by itself. And sure enough, the blue line is the NAV by itself. It's down about 29 or 30. The thing is that you would never buy this investment for the NAV itself, right? Somebody wanted you to buy a high yield fund that said you only get the NAV, you don't get the yield part of the high yield fund. You wouldn't do it, right? It'd be crazy. So anyway, so this investment's down 9%, not 30%. It would be down 30% if it weren't for the dividend. But you could see for the indexes, they were up a point. That's a lot. That's the SPY, and the Qs were up 1.3. Anyway, so none of these funds outperformed the index, with the exception of ULTY. None of the other funds did. But let's see which ones performed really well. I would say SPY-T caught about more than 75% of it. I'd say FEPI did a good job. AIPI did decent. SPY-I did really well. The laggards today were ZIVB, Y triple Q is an inverse fund. It's supposed to lag, right? It's actually doing its job. It's an inverse NASDAQ fund. NASDAQ was up 1.3. So in theory, this should be down 1.3. It was down 0.78, but it's doing what it's designed to do. Yeah, look at YBTC looking good today also. All right, let's check out and see how the market's trading right now, because the market's been reopened for an hour and a half. Let's see if we're still going up from the close or if we're down from the close or what. Okay, the close is right here where I have my cursor. So we've gone straight sideways from the close. We're pushing right back up against 20. I'm going to 20,000. Lots of times the big even numbers serve as like emotional support or not emotional support. That's not an emotional support animal. Psychological support would be a better way to put it. Even in other words, even if the market has never been there before, you could anticipate there might be resistance at 21, 22, 23, 24, 25. But anyway, so we're right close to 20 again. It looks like we almost got 21. I didn't remember that. We got as high as 20,900. So this time when and if we get to 21, it'll be an all-time record. Hey, you guys also want to know something that's scary. And after this, I want to let you go. But I like the system of when a security, something you follow, trades outside of the Bollinger Band, especially 2 times in the same direction, it's usually a pretty damn good sign it wants to go that direction. Sure enough, we got a sell signal right there on the Bollinger Bands. And sure enough, the market, it caught that big move down. The market went down. But anyway, the same thing happens in reverse. So if we get 2 closes on top of the Bollinger Band, it's going to give a trending buy signal, kind of like it did right back here. See that? Think what a good buy that was. That said get in at 18.3, and it went all the way to 20,900, and it was still it was at 19.1 before it gave a signal the other direction. Anyway, but that gave a bullish trending signal. That gave a bearish one. I think we're going to get a bullish trending one again. Yes, and I know it would have been better to buy down here, but that wouldn't be a trend following system. That would be what's called a counter trend system where you buy pullbacks. So we're just talking trend following right now. But I agree, it'd been better to buy down here. In hindsight, we didn't know that at the time, though. All right, guys. I appreciate you guys listening to me, and I'll be back later. All right. Thank you.